Hello and welcome to the Wednesday check-in with Landy here on Landy's Crypto Corner. Today is, what is today? Today is September 18th, 2024. Yeah, I should know that because today was the FOMC meeting where the Fed cut by 50 basis points when 25 was expected. Now that did cause some lower term time frame volatility across the markets, but in general, it didn't change much of what structure was already being built in both traditional markets and here on Bitcoin. Now let's get into the here on Bitcoin part because on Monday, we did point out a few interesting things that were occurring on the chart here. We had the Monday candle come down and test into this 57.5. Now I had mentioned I didn't have this yellow line here yet because we hadn't had the Tuesday candle that set the low. But I did mention that Bitcoin being above the basis band here on the daily, kind of right into some support areas and support structure, testing down to that 58,400 level, 57,500 on the low. That area needed to hold at that 57.5 in order to avoid dropping further and testing further down, into the 55,850 level. We'll take a look at levels in just a moment, but either way, what Bitcoin subsequently did on Tuesday, just prior to the FOMC meeting, was close a higher low here. And that was a very nice sign. But the criteria to the upside to break the downtrend was this lower high. You can see that it's now broken at that 60,660 right here. And on any closures above there, preferably on higher lows, like what we just saw, would be a trend reversal. So we have a higher low, higher high structure now on the daily. So pretty much played out exactly as we had discussed. Even in the support and resistance areas, that 61,000 to 61.8 level, when looking left, and then 62.8 up here as the next area of resistance at the wick high of this lower high from this downtrend, lower low, lower high, higher low, higher high. Well, now we have lower low. We had the higher high to lower low, lower high to higher low, and then higher highs now can only be had from here. Now, the criteria to remain trending to the upside here is still going to be this higher low at 57,500. So bulls, you want to see closes above there on the daily from here on out until we get another higher low. And we even hit 61.8 as the, that's really funny, 61,800 on the high exactly in yesterday's price action as well, with a close at 61,769. Man, hit my number and then went for the meme. All right, well, that's pretty cool. We're almost at that 62.8, I believe, on the high today. What did we get? We're going to go Yahtzee. Nope, 62,600. So about $200 shy of this wick high. Yeah, that rhymed. Now, realistically, above 62.8 from just a structural point of view, now that we have an uptrending structure, $65,000 is what needs to be closed above. Now, the close open up here is 64,250 with the wick high at $65,000. So I did want to point this area out. If structure were to break, a bearish reclaim of the lower high at 60,660, watch out for 57,500 in those lower term timeframes below the daily. We start seeing dailies close below there. Realistically, we're looking for a retest of this area anywhere between, essentially anywhere below 58,400, which you're going to see in just a second. 55,850 to this low side structure here at $54,000, which is below 55,850. That's kind of your danger signal, by the way. Down to 52.5 would be fair game. Bears want to see closes under there because then they want to go try and run this wick low at $49,000 and lower. But bulls don't seem like they want to seed that area, and they would like to go higher. Bulls want to get high. Anyway, let's go ahead and take a look here. The Bears kind of had their chance through the first half of this month. They pushed things down pretty substantially to test into this area already. Kind of, you can go with your it didn't hit your 50% fill rate on the wick. That's why we don't really care about that here. Some of the rules in markets will be broken more often than not, and they're rules only for only for those that need to fill out pages in a book. In many cases, when you look at the actual statistics, you can find some confluences, but they're usually on lower term timeframes than when you're referencing the daily. So, all right, let's go ahead and turn off the Bollinger Bands for just a moment. We talked about trend. We need to talk about support and resistance. This is pretty darn clear. As long as Bitcoin was above 55,850, I was calling it good to go. Bitcoin could test up to 58.4. It had already done that. It dipped into the 58.4 level down to 57.5. And then what did it do? Came and closed right on that 60,000 to 60,000, 2 to 300 area at the bottom side of the recovery zone. Got that nice close open coming into yesterday's price action. A little bit of volatility to the downside there during the FOMC meetings portion of the Jerome Powell discussion. And then we looked left, we've already kind of hit that. We're kind of right in the middle of the 61,800 to 62,800 level. Above there, we're looking 63.8 to 64K. And then we want to see Bitcoin gunning for that $65,000 high, because this high is not just a high on the daily of this prior little uptrend here on the daily, but it is also the high on the weekly, that lower high that needs to be beaten to, or closed above, I should say. We could beat the hell out of it all we want, but it doesn't matter. We need to see price close above it. So in this case, we need to see closes above $65,000 to break the weekly downtrend. Trading at 62, not bad bulls. Now, if there is a little bit of a pullback that is, getting back below some of these key levels, kind of anything back down, bouncing around below $60,000 and top side at 58,400, just eyes on that low at 57.5. Above $65,000, which is of course the first high from 2021. We're looking at 65.5 to 67,272. If you're not familiar why that is such a big area pivot number, especially at 67,272, that is the first actual major lower high of this entire downside structure here on the daily and higher term timeframes. You might be saying, well, there's lower highs up here, Landy, you're crazy. Well, this was in the context of higher low structure. We had the big downtrend break and then boom, burst. Okay, English, please. We got boom down to our first big lower low, and then our lower high here at 67,272. And then, of course, we had the next lower high come in at 65.5, a little bit of a front, or a little bit of a wick past that prior cycle high at $65,000. And then that was the first prior cycle high, and then we had $69,000. Obviously, we had the first higher low structure that's defining kind of our recover zone here. We even see how price sat on the second big major downtrend of the range here. We had the first big lower highs up here just above the pivot zone at 65.5 to 67,272. Above there, I would be looking to the next, the first big lower high right here of the second major downtrend. That's $68,000 to $70,000. We have seen that area act as really heavy resistance at like 68.3, and then that wick to perfectly hit $70,000 there in that zone. Bitcoin's got a tough road ahead of it in terms of local support and resistance zones above it. Obviously approaching it from the bottom side being resistance, but in this case, in general, if we do see it closes, especially on the weekly above $65,000, I would expect this entire structure to get hit, ran, possibly even broken out above on the daily, even if it is brief. And then we look for higher low structure to develop either on a swing or closing basis on the weekly. But we'll talk about that again on Friday. Let's go ahead and throw our Bollinger Bands back on here, because we've got trend, we've got support and resistance, we've got we should talk about the downside. Yeah, if this area is dropped, 52.5 is dropped, we're looking at being below the lower second standard deviation. And then filling out target one of distribution, which technically encompasses $49,000 wick as well now at the top side of target two. So that's essentially $53,000 to $49,000. Anywhere below there, we're looking for things to get filled out below. At what were we looking at? 49 to that 45.5, which is that monthly bear market lower high from 2022. That was a big one, 45.5 to 48.240, but this kind of encompasses it with the wick down to that area. Now, it's only on closes below that I would look for that area to get filled out, and then possibly lower down to the electrical cost, which I keep forgetting to keep it on the chart here. Nope. Is it this one? Nope. Is it this one? There we go. It's the horizontal line, not the ray. All right, we want lines, not rays. Every Bitcoiner wants to do some lines straight to the upside here. And let's go ahead and stop with the innuendo and look at this Bollinger Band set because it's pretty damn clean. Back below the upper first, which is the bottom side of the recovery zone or recover zone, then we're essentially looking back to 58.4. This low, this higher low at 57.5 is in danger at that point. We see the basis is right there to catch things, but if we got any closes below there and below the 57.5, we're looking for price to head down to the bottom side of the risk zone, top side of the danger zone at the lower first standard deviation now, which would be somewhere around that 55,850 level, almost 56,000. It's not exact, but it's close. Anywhere below there, we're looking for, price to head down and retest the low side structure at $54,000 at these equal low closes. And then, 53.5 to 53, and then the wick low there at 52.5. That would be bad. Below the lower second, expansion down, right? Above the upper first, I would be looking at kind of the upper second, kind of governing things until Bitcoin can get a closure above it. That's currently coming in at 62.5. Now, this will oscillate ever so slightly during the day, so I would consider this 62.8 to be fair game by the upper second standard deviation. Anywhere above there, of course, we're looking at 63.8 to 64K, and then above to the upper third, somewhere around 65 to 65.5 at the bottom side of the pivot zone, and higher to 67.272, 68.70, 70.72, 73.835, all-time high, stuff and higher. Anyway, looks good. The bulls have a chance here, especially coming into the end of the week with liquidity rolling into the Friday candle with a bunch of options expiring. The bulls set themselves up in a very good way right now. Mini pullbacks notwithstanding that don't break structure on the daily are going to be perfectly acceptable. I would say, bulls have a chance here. This might be their chance. Setting up from that FOMC meeting in this manner is really good, at least as it stands right now. Again, eyes on 57,500. If that area is dropped, structure breaks for this little uptrend, right? So we need to pay attention to that coming into the Friday options expiry. That is going to be a massive one. It is the quad options expiry. So, it's not a little one. It's rolling liquidity for the end of the quarter into the fourth quarter of the year, which is technically preparation for first quarter of next year. We get about 2 quarters ahead usually for some of this stuff. Not always, but this is a big one, right? So I would say that personally, structure notwithstanding, like anecdotally, I think the Bears had their chance and they kind of whiffed on it, so the Bulls took it over. I'm not super impressed with the Bulls right now. I'd like to see some bigger candles, some bigger candle bodies. Maybe we can get a few of those. I'd like some distance between Bitcoin's price and some of its pivots that I'm going to show you here in a second, and that's on the daily. So we can see that the daily's in the overbought zone for stochastic momentum. Now, this doesn't really mean much in terms of being in the overbought zone. It can stay up here for quite a long time. We need to see another closure above around $62,000 to remain in the overbought zone, pointed to the upside. It's kind of lurching down and to the side, looking a little tired today because it did, even though it did spike up and is still living above that 62,140, which is above the pivot at 62,049 or 62,050 bucks. I'd like to see a nice strong close, keep that nice point into the upside. Bulls are excited, all that good stuff. And then that lead into something like this 2-day really, really picking up off the ground. Yeah, isn't this beautiful? There it is. We have, the 2-day momentum chart. It's essentially the same stuff, right? It's this right now is just an equal low on the 2-day. It still needs to break out and break the downtrend at 62.5. So it's one of the things that I wanted to point out. I don't often take a look at the 2-day, but we have a new 2-day candle in play here coming into Friday. So 56. 600. So, 56,600 is going to be the pivot for the 2-day. That's pretty good. For those that understand what an ADX and DMI are, this chart down here is a DMI. It's almost ready to turn green on closes above 62.8. Hey, go figure. We just talked about 62.8. That is the, I just want to see this building day by day. But 62.8 is essentially this high over here. We need to see, DMI would turn green on the 2-day there. For those that know what DMI is, if you don't worry about it. It doesn't matter to you. Just understand, you want to see close above $62,000 for today. You want to see that preserved through to Friday. Closing above 62.8 would look good. And then crawling its way towards $65,000 would look even better, and above by the weekend here on Sunday. So that's something to look out for. That's going to wrap it up for today, I believe. I don't think there's too much more to talk about. I've been talking really fast because I'm kind of tired, and I feel like I have to talk faster when I'm tired in order to get it all out. I'm going to be back at you again on Friday with some chart stuff. We'll do some chart talk. I had a really good conversation with Benny and Maines over there today. We just started a series on Fridays. Today's Wednesday. What the hell? I'm thinking Wednesday, and then I'm going to talk to you again on Friday. But on Wednesdays, chopping charts. That was really fun. I had a good time over there with them. Go ahead and listen to it. It is posted to the X timeline here. And yes, I know for those of you that keep telling me, like, why is your chair so creaky? Aren't you a trader? I'm like, man, every chair, it doesn't matter how new, that thing's creaky within like a week, because I do a lot of seat time in my trades. And this is probably the most non-ergonomic chair that I possibly have in my house, but it's the most comfortable one, because like after a while, your ass cheeks just become a part of the chair. And it's a little creaky, but it supports my back. That's what I need. So stop making fun of my chair that you hear in the background. Anyway, just joking around. Love you all. I will catch up with you again on Friday. Look out for different Spaces events that I'm running throughout the week. There's probably going to be one from the sock account over there tomorrow. Again, random times. You never know when that guy's going to be on, but we do know it's going to be on a Thursday. It might be midnight your time, might be 3 a.m, could be 12 in the afternoon. Who knows? But either way, big one on Friday, though, is Goyoza and I from Nat Monkeys are going to be talking to Zest Protocol. That should be pretty interesting, both for Bitcoiners and for Stacks enthusiasts in the Stacks community. So come on through to the Friday one. It's at 10 a.m. Pacific Standard Time, 1 p.m. Eastern Standard Time. And then, I'll be wrapping that up on Friday with another video to get you prepped for the weekend. You have a great one. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.